Good morning, everybody. How are we all doing? Happy Monday, new week, halfway through the month. All good. How are we doing? JC, Baggy, Great Phil, Noob, XR, Update.news from Miami. Miami, eh? Very posh. Grand Theft Auto Land. Virginia, Gregors, how are we doing? Right. So today, give me one sec. We've got no news. So it's a bit of a crap day today. It's a bank holiday in Japan, and we've got Empire State Manufacturing Index later. So not really expecting an awful lot of movement today. There's no news over the weekend. Nothing really exciting has happened apart from Trump getting shot again. Well, not getting shot again, but someone trying to shoot Trump again. Maybe one day. You never know. But anyway, so apart from that, there's nothing happened over the weekend. There's University of Michigan on Friday. And yeah, bit crap. So nothing exciting really to look at from the weekend's news. Nothing's really happened from a gapping perspective anywhere. Indices are all pretty stable, although dropping this morning. So yeah, nothing really exciting over the weekend. The week coming, we've got obviously a very, very busy week this week. We've got multiple interest rate announcements. We've got CPI. We've got all sorts of stuff this week. So it's going to be a very busy week for news. Whether that translates into movement in the market, we'll have to wait and see. Morning, George. Church, how are we doing? So yeah, we'll see what happens this week. But obviously it's FOMC week. It's interest rate week. For the Fed, it's the first rate drop we've had in 12 months on the Fed, so it could start some decent movement in the market because it's been pretty flat for the last month or so. So we'll see what happens. But this week, so today obviously we've got nothing. Tomorrow we've got the CAD CPI tomorrow afternoon. So CPI is forecast to drop, which will again weaken the Canadian dollar. Interest rates are already coming down. As long as that CPI number keeps going in that direction, they will keep to dropping those interest rates for the foreseeable. So if we get the forecasts tomorrow, which are all forecast to be lower than previous, we should see continued weakness coming through in the Canadian. It should, I mean, in theory, this week, it could be a very weak week for the CAD and the US, because the CAD and the US move together. We've got interest rate drops in the US. We've got forecast CPI drops for the Canadian. So if everything pans out as forecast, the market should sustain weakness moving forward in the CAD and the US. So it could be quite a big week from that perspective. Retail sales, again, forecast drop in the US, which will again be bearish. That's coming out same time as the CAD CPI tomorrow. Pound CPI, this is a year-on-year figure, which comes out for the pound. That's forecast to come out as expected. Again, Bailey not planning to change interest rates this month. So you can see that's there on Thursday. So that CPI figure, if that comes out lower than forecast, a 2.1 I don't think would do much. If we got 2%, might sway Bailey to do something. So we might get a different number of votes coming in. But that should come out, I would imagine, at forecast, but we'll see. Then we got the rates, obviously. FOMC is 5.25, so they're dropping by 0.25%. There is still a chance that we might get a 0.5%. If we do, the market will react, but more likely we're going to see the 5.25. The FOMC press conference is where we're going to get the movement, though. So somewhere between 7:45 to 8:15, we tend to get the market kicking off because the press conference is obviously laying out forward guidance for what their future plans are. We kind of know what they are. They change their mind every 5 minutes, but the press conference is where we tend to get the volatility. So this will create the whipsaw. That will create the move. So somewhere between 7:45 to 8:15, probably 8:15. We'll get that move in the US if there is one warranted. If there isn't, then obviously it won't do anything. GDP for the New Zealand dollar overnight, again, that's forecast to be dropping. Australian unemployment is forecast to remain the same for Thursday morning. So we could get some movement on the Aussie-New Zealand pairs overnight, Wednesday, Thursday. Pound rate comes out 12 o'clock on Thursday. Again, we're forecast to stay the same. The votes are forecast to change. So this is really what would indicate future forward guidance. So we don't tend to get a press conference with Bailey and with the Bank of England, but they do announce the votes basically, which is for freezing, increasing, and decreasing rates. So I suspect, obviously, what they're anticipating is the vast majority of members are going to vote to drop the rates at some point. So soon. So that possibly could weaken the pound further if that comes out a little bit more aggressive. Obviously, if they drop the rates, the pound's gone. But it's very unlikely they'll do it, but you never know. So they've got that coming out on Thursday. Unemployment claims come out on Thursday as well for the US. Obviously, they change on a regular basis, so you just need to wait and see what they come out as. The Bank of Japan is not forecasting to change rates this time round on Friday. We've got the press conference, again, forward guidance. Bank of Japan, very, very open, though. They've said they constantly say what they're going to be doing with their rates. Doesn't really make a lot of difference because it's so tiny. But anyway, we've got that coming out on Friday morning, so volatility around the yen. Retail sales forecast to drop for the pound on Friday. And then we've got Macklem speaking, and we've also got the retail sales. So again, volatility for the CAD. Those are forecast to be dropping as well. So everything we've got this week pretty much is pointing doom and gloom for every currency, which is basically drops. So obviously everything can't drop at the same time, because if something drops and something else drops, they can't both drop. One of them will gain. So it's about who's going to be the weakest this week. And obviously it's mainly focused on US and CAD. So it's going to be a busy week this week, a lot of volatility. Today, I suspect not an awful lot of movement because the market's not going to want to put a lot of big moves in ahead of these news events until it knows which way it's going. But we'll wait and see. So FOMC weeks, you either get one or two things happening. Either Monday, Tuesday, you do get movement, and what it tends to do is factor in that very last load of movement, and then often it will undo that move on FOMC, or you get that not sure really we want to do anything until we know what the FOMC result is, and then you get a breakout on Wednesday. So we'll have to wait and see, but I suspect it'll probably be fairly quiet today. So far, ADR wise, there's nothing obviously hit ADR. There's nothing getting close today. So very, very quiet at the moment. Aussie's a little bit weak this morning. So is the US dollar by the looks of things. So, but as you can see, nothing really dramatic this morning. Pound's rallying. This is US dollar weakness by the looks of things. So US dollar a little bit weak at the start. So could indicate that we might get the market getting out of the US ahead of FOMC. And obviously then it could even go further. So tricky. So just be a little careful today. If you get triggered into trades with the EAs, just be careful that obviously you're not going to get overexposed on US dollar and CAD this week specifically. Because if it does go against you and you've got a load of exposure on, obviously that could be a hindrance. So I took a Euro CAD short on Friday. It's pushed up again this morning. So second entry will be going on today if we get that continued weakness in the CAD. So anywhere above sort of 3/4 to an ADR today, I'll be taking second position on that one. Resistance is that weekly level. We got that high there. Loads of levels around this area. So this whole area here is selling. So somewhere around there. And we're looking for a pullback on this whole leg. So we pushed for 2 days, accumulated and broke. So there's not been a profit take, not been a pullback. So the further this gets extended, the further it's going to drop when it retraces, hopefully. So wait and see. But at the moment, yeah, definitely weakness in the CAD and weakness in the US at the open. Indices this morning, hedged on the DAX, no trade on the FTSE. That's annoying. So range on the FTSE, pre-market range too small. And opening range too small today. So opening range on the FTSE was 93 this morning. Minimum range 10% is 96. So no trade there. Nice clean break up to 1R though. If you took the opening range, if you took the pre-market range today, you'll be hedged. But yeah, no trades there. And DAX got hedge on this morning. So upside looks pretty good. Somewhere around there. ADR is there this morning to the upside. We're coming off the back of a 3-day rally. So there's a chance I think we might get a pullback today. We are off the back of a 3-day rally on the DAX, so they're going to be quite exhausted. So some kind of pullback at some point today, although obviously it has pulled back at the open. So we'll see. Downside. So downside today on the DAX, we've obviously got the previous day's high, which really use on Friday as support resistance at all. So it's probably not that valid, that level. Friday's low, obviously, is the obvious spot to the downside. Failing that, the low on Thursday is sort of almost 150 ADR. So it's quite tricky to the downside today. Probably get some reaction if we do get to Friday's low. So I'm going to put TPs at Friday's low to the downside. Upside, just going to leave it where it is. That's 5R. So DAX. Yesterday's low is about 3.5R. That's where I'll look to try and get out shorts. Longs, obviously. Friday's high is a bit too close. So, but you know, there's a good chance we will just get rotational movement this week. So it may be that we don't actually go anywhere off of this 3-day rally that we've had. We may well just sit around. Let's see what the US markets are doing this morning. Nothing. So US markets are dead. No movement at all. Friday, as you can see, was quite weak on the Nasdaq. Little bit of movement on the Dow and the S&P, but really dead on Friday. And again, US markets coming off the back of that 3-day rally too. So chances of a pullback today and a little bit of a correction. We'll see. Oops. But so far, not really setting the world on fire this morning, is it? Nice break on the FTSE, but only 1R. So, and literally not gone anywhere since we opened. So we'll see. We'll come back to that in a bit. So yes, today we've got no ADRs. Obviously, no weeklies to look at because it's the first day of the week. Monthlies, we've had quite a few hits, but they're all yen. So the US yen, New Zealand yen, pound yen, euro yen, CAD yen, Swiss yen, Aussie yen, all yen. So yen basically has done ADR already, as we can see. So that's the beginning of the month. And we've basically just been dropping all month. We have sort of bottomed out down here at the moment, but dropping again this morning. So all the yen pairs are ripe for long opportunities. I'm just going to cancel a pending. I put a pending order on this morning on Swiss yen. There, I'm just going to cancel that off because it's broken now. So the reason I put that pending order on was because obviously these wicks. So Friday we pushed down, rejected, pushed down, rejected, pushed down, rejected, pushed down, rejected, pushed down, rejected. This morning we pushed down, rejected. We hit that level, rejected it, rejected it, rejected it. So I thought that looks like quite a good area of rejection. So I put a pending order in, and as soon as I put the pending order in, it broke. So cancelling that pending off. So yeah, looked like a good level of support. They were buying this constantly on Friday. They were buying it all morning in Asia as well, but we've broken down. So it was going to be a kind of scalpy play anyway, because I don't really want more exposure on the yen. I've already got one on the Aussie yen, which is just stuck at the moment. So this morning we'll go through all the pairs. ADRs, there's nothing. RSI, again, the other reason I was looking at that Swiss yen trade is we are also extended on the RSI on the 4 hour on that Swiss yen. So it is still a good opportunity for a long. Look how extended and embedded that is. So we are on a 2-week solid drop on the Swiss yen, and it's still coming down. So still some strength coming through on that yen. But yeah, 2 weeks solid down, you would expect some kind of profit take pullback off of that. So it's a good opportunity to get in on that one. If you did want some yen exposure, you're not in any yen, that's probably the best setup we've got at the moment. Euro CAD also extended on the hourly, but only just. Got one on that already, getting ready to take second. And pound CAD. Also got one on that from Friday. And same. So we'll be getting into a second on that one. There's no upside resistance anywhere. So, blimey. So this is not all-time highs, are we? But we're certainly at high of the year for a start. We haven't been here since 2021. So this is obviously a pretty good resistance level. So we hit it 2018, we hit it 2019, COVID, 2021, May, August, now. Yeah, so very good, strong resistance level up here. Not that I would ever hold it for that long, but yeah. But it's trying to break out this morning. So if it does break out at this level, obviously we're off somewhere. We'll see. Could be going absolutely anywhere if this gets broken out of this morning, but we'll see. Right, so this morning we're going to go through all the pairs, have a look, see if there's anything set up. I haven't got a lot of exposure on at the moment. I've got Euro CAD, Pound CAD, and Aussie Yen. It's a tough month at the moment, 5%. So yeah, struggling a little bit to get any exposure, because just not really moving much at the moment, the market. So even the 4 hour RSI 10, which I switched over to, it's just not getting many signals. It's just not, there's no sustained strength or weakness anywhere much. That was the last entries there on Aussie CAD, look. But we're just really struggling at the moment to get any decent moves. Morning, everybody else. Just got out of Pound CAD. Short, noob. How did you get out of Pound CAD short? It's been doing nothing but go up all day. Unless you've taken a loss. If you've taken a loss, you're obviously not position trading, which is fine. Morning, Neo. Morning, Danny. Morning, Franco. My trading journey has hit a temporary wall. Hope you're using an airbag. Had a small heart attack. Oh dear, that's not good. I just thought I took Friday's small losses hard. In hospital now. Surgery in the morning. So no more 15-minute charts. Get well soon, Franco. Oh dear. You're in hospital watching me. That's dedication for you, but equally, relax. Keep the blood pressure low. Trading is probably not something you want to be doing when you've got heart problems, because it obviously is quite stressful. Oh, well, get well soon. Yeah. 15-minute time frame, yeah. Stress-free trading is done on 4 hour and above. So time to slow down. Move to the higher time frames. Can't sleep, it's relaxing, yeah. Blimey. Well, take it easy. I don't know what advice to offer for heart attacks, really. I haven't really got any. But yeah, chill. Oh, sorry, wrong button. So yeah, so there's your news anyway. So we covered news. We will go through everything else. Morphine is great. Yes, morphine is great. I had a pulmonary, I can't even say it, pulmonary embolism about, I don't know, probably 20 odd years ago, something. And I've only ever had morphine twice in my life. Once was then because they couldn't move me because I was in so much pain. I had a pea on my lung basically, so I was stuck like that. And every single movement, if I moved my little finger, it was agony because you're making the blood try and get past that clot, and it absolutely kills. So they couldn't move me. So they gave me gas and air and morphine, and I just walked straight to the ambulance. It was amazing. And then I had a massive car crash, which some of you may know. Yeah, had morphine then. It is very, very good. I can see why people get addicted to it, but probably not the best thing to do. Do not do drugs, people. Right, unless the doctors are giving it to you, then it's okay. Right, so let's go through all the pairs. So starting with the Aussie. So just quick recap of interest rates and inflation and everything where we are at the moment before we go. So interest rates, obviously, Aussie dollar is not moving. We are stable. We cannot drop the interest rates because inflation is still too high and inflation is not coming down. Canadian dollar, we have dropped interest rates. Inflation is very close to target and dropping, all good. Swiss do what the hell they like. Euro, we've had the biggest interest rate drop out of all of the currencies last week. Inflation is pretty much at target. Everything's going well. GDP still rising. They've got a massive unemployment problem, which means they've got to get that down. So, yeah, Euro, I suspect, is going to be neutral for the rest of this year to slightly bearish. Pound, we've dropped once. We're at target. Everything's going okay. We've got the CPI number coming out this week, which will tell us whether or not we are freezing CPI. If we are, they should be able to continue to drop that. So pound ever so slightly bearish. Yen we don't really worry about with interest rates. New Zealand dollar are dropping. That's still too high, but coming down very fast, which gives them the free fall to drop that. And the US dollar. So US dollar, basically, interest rate change is happening this week. Inflation is very close to target and coming down at a decent rate, meaning that they can continue to drop it for the rest of the year. So, yeah, so basically we've got a bearish stance from interest rates on pretty much everything apart from the Aussie dollar and probably the euro now, which is more like that. So everything else should be starting to weaken and we should be getting those moves down. They will obviously pull back, but as I said earlier, just because something's bearish doesn't mean it's going to go down. You can have something bearish go up for 2 weeks on the trot because market doesn't move in a straight line forever. And also, if you've got something that's bearish and there's something that's more bearish, the bearish thing will still go north. Yeah. So if you've got the Canadian dollar, yeah, dropping interest rates and being bearish, and the US dollar drops interest rates by 0.5%, the Canadian dollar is going to rise compared to the US because that will just drop faster. So you just need to have an overall idea of where stuff should be going long term. So, for example, everything against the Australian dollar, yeah, Aussie should be rising against everything, although at the moment the Aussie doesn't seem to be particularly strong against anything. But anyway, so that's where we are with interest rates. And obviously inflation is all coming down. Everything's kind of getting a little bit more back to normal, except those interest rates are still far too high than most of the central banks want them to be. So with all the Aussie pairs, I'm going to quickly cover the yens first, actually, before we do the Aussie, because the yens are all the same. So I've got this Aussie yen on, and I said when I took it, I'm probably going to regret this. I've made some profit on it already. I'm making positive swaps on it, which is good, but I do not know which way this Japanese yen is going to go. So the yen, obviously we had the intervention. We've had the pullback. We got stuck with most of the yen crosses for about 3 or 4 weeks, and they started to break down last week and sort of the week before. So we are in the middle of what looks like the next wave of strength on the yen. However, it's not going to be anywhere near that. This is a never happened before in the history of the yen style move. 4 weeks of the strongest movement we've ever seen in it. Normal price action is like this. That is an intervention. So we're recovering from the intervention. We will go into expanded volatility. So ADR is going to increase on the end. There's going to be more interest in it, but it's not going to do anything like that. Shouldn't do. So we are coming back to normal movement on this. ADRs are reset now. So this is the new norm for the last 2 weeks, last 10 days. So yeah, just waiting for some kind of indication as to whether we're going to continue this. So we should be getting normal market structure, hopefully coming back. The problem we have is obviously everything is weak at the moment with interest rate drops. The yen is strong at the moment. So everything basically could continue down against the yen because it continues to be strong. So very hard to sort of know how this is going to move moving forward because it's new territory for everybody. So we've obviously got monthly levels coming up on most pairs. However, some of those have already been exceeded, like the US dollar yen. So, so I've got Aussie yen long on at the moment. We had a reversal alert last week, which double topped, and they're now retesting. So if we don't break last week's low, we'll be looking for new highs. So that's your low, your high. We could be putting in a lower high or potentially a double bottom and then coming up to retest this level. But this was a very strong retest and very strong hold. So it does look like they're not going to weaken the yen. Doesn't mean it's necessarily going to strengthen though. So I've got longs on this at the moment. Average is 125 ADR, so it's not particularly far away. We can hit that in a day. Made profit on it with an aggressive drawdown control position. So I'm about $1,000 or so up on the trade as it stands. Just waiting to see what happens next. So we'll be getting into another trade today if we come and test this low, which is basically adding this one back on again. So we'll see what happens with that one. CAD yen, that is one that still hasn't broken the lows. So again, we've got lots of CAD news, lots of US news, which is potentially going to be bearish this week. So it should be fairly easy to come test that low this week, I think. Again, there's your 3-4 week area we've broken out of. But, you know, this is the intervention low. There are going to be a lot of orders at that level. So I'd be very surprised if we don't get some kind of reaction when we get there. Even if we hit that on news, I think we'll probably bounce. I think they'll get overpowered at that level. So if you are long on any of these yens, obviously they're all extended, all embedded. So it's just a case of waiting for limit orders to trigger at those levels, I think. Swiss yen's broken down. Swiss is incredibly weak at the moment. So yeah, broken out of that one. And still going. So you're on a 2-week drop. You've got 4-hour RSI extension and embedded down there. Again, just waiting for some kind of pullback on it, but could well be just a flag and break, but we'll see. Again, all the yens are going to move in the same way. So if you're going to trade anything yen, just make sure you just have one trade on it, really, ideally. You got one at ADR there on the euro yen. So again, that's coming down to test again, more yen strength coming through. We've got lots of dangers at the moment as well with interventions. We've got the Middle East kicking off even more at the moment. We've got obviously Trump being shot at. Doesn't help. Yeah, whenever anybody gets worried about anything going on in the world anywhere, we pile money into the Swiss and pile money into the yen as the safe haven and into gold. So if that does happen, if it kicks off and escalates anywhere in the world, the yen's going to power up more. So just got to be aware of that when you're longing them. This is why these are such difficult trades. The carry trade on the yens is what the banks and institutions use a lot to make money because you get positive swap on it because the interest rate's so low. It's difficult because it also is a safe haven currency where you get a load of money piling into it when things go wrong. So everybody's in it trying to make money on it weakening, but it keeps strengthening up every time there's a problem. So it's a very tricky instrument to trade the yen. But again, same thing here, 200 ADR, bounce potential down there. And New Zealand dollar yen, same thing. So they're all the same. US yen has broken out the lows. Obviously, we identified that level last week here. And this morning, we've broken that. So the next level down from there is all the way back in 2023 in June, which is 200 ADR away from where we are at the moment. So any shocks on Wednesday with the interest rates, i.e. dropping by a half and not a quarter, we will be down there for sure. So we've broken that support this morning. So we'll see if that holds. If they push back up and hold above there, there's potential that we might hold around this level this week until we get FOMC. But yeah, very weak US dollar, weak CAD, strong yen. It's not going to go anywhere but down. So this is the most volatile one to trade, obviously, the US dollar yen. So you've got these obvious levels coming up. But, you know, it is an instrument that typically tends to rise. So, or grind, yeah, as your COVID. And it's that big old interest rate run that caused the US dollar to strengthen up so much and the yen to weaken so much, because it's just easy to make money out of countries increasing interest rates. So that is not the case now. So whether this is going to come back down and back to normal, difficult to tell. But it will hold that 150 level, I think, now. So the 150 level, the yen intervention level, if we were to get back up to there, be interested in shorting that, definitely. Sort of an investment play, really. Short it and hold it. But at the moment, coming down. So be watching this level here with interest at 200 ADR for a potential bounce play like that. But I'll be in the yen anyway, because I'm in Aussie yen. If the US yen comes down, this will come down with it. So we haven't got an awful lot of news this week. We've got Aussie unemployment, haven't we? So unemployment change is going down, which would be bullish Aussie. So if the unemployment rate actually drops to 4.1 as well, we might get a decent move on that on Thursday morning. So obviously that'll be after FOMC. So it will have moved by then. So those are your yens. Not a lot we can say about the yen, is there really? What do you think about Goldman Sachs trader Anton Creel's course? Yeah, very good if you want to dive very, very, very deep into fundamentals. Do you think they've got a better edge than retail traders? Well, yeah, because they're not retail traders. But Anton's a fundamental trader. He's an economist. So, yeah. Somebody that has a degree in economy has worked as a fundamental analyst in a large institution. Yes, they're going to have a better edge. But I've done Anton's course. Yeah. And I can tell you, if you haven't got a degree in economics, you will not get anything out of it. It's incredibly complex. I can't show you the spreadsheets, but I've got them somewhere. Where on earth would I have put those? So what I've got on my website here. Yeah. This is a dumbed down version of Anton, of basically scorecarding, which is what banks and institutions use. And this is what you will get taught. Just trying to find my spreadsheets. I've got 28 folders of spreadsheets to do with that. That's probably the best one. I'll show you the endogenous driver analysis. Okay. So this is the sort of stuff you will learn if you do that course. So you will look at cycles, GDP analysis, ISM analysis, NMI analysis, Chicago analysis, building permits, M2 money supply, interest rate differentials, CPI, different type of CPI, PPI, non-farm payroll. It goes on and on and on. Government bonds, GDP, all of this goes together to give you a scorecarding system. And the scorecarding system, at the end of it, gives you a bias. But this is just for one currency. So you have to do all of this analysis on a weekly basis for every currency. Yeah. And then compare the results of both of those together to give you a directional bias on the pair that you're looking to trade. Okay. And that directional bias from that scorecard will give you a direction to take on a trade idea. So it basically creates a moving average for you. And you take that trade, and at some point over the next 1 to 3 months, it will play out. Don't forget, this is institutional trading. Yeah. They're not trading 5-minute charts. They're trading long-term 4-hour, 1-day charts over periods of weeks. So if you want to become a long-term investment swing trader, Anton Krill's your man. It's going to cost you $5,000 to do his course. But and unless you've got, like I say, a hell of a lot of time on your hands, a degree in economics, and probably about £1 million in the bank, ain't going to help. This will do. This is on the web for free. It does the same thing. What I got out of the course was the most important things we focus on are these. Yeah. If you've got a higher interest rate for one than the other, and it's going in that direction, the differential, you want to buy. Same with inflation, same with GDP, same with unemployment. There's 100 other fundamentals that go into the melting pot. But at the end of the day, banks and institutions make decisions based on these. So at the moment, the Canadians are dropping their interest rates. The interest rate differential is a negative. The pound is not planning to drop its interest rates, is staying more stable and is higher. Therefore, the bias on the pound CAD is the pound should be stronger than the Canadian dollar. Buy it. Yeah. COT position is long. So the market's overall futures market positioning is long. Retail are all shorting it. They're idiots. That's basically what I put together out of what I learned in that course. Because it's too much for, if, like you say, you've summed it up there. Has he got an advantage over retail traders? Yes, in the fact that he's a bank. They do not trade in the same way as most retail traders. They don't use stop losses for a start. DCAing is done there, same as I do, position trading. Yeah, so there's a lot of stuff which kind of gels with what I do. But you will get, I mean, it's the sort of course you need to watch it 5 times. And even then you'll be going, I missed that bit. It was quite important. Yeah, it's just unbelievably complex. Yeah. But the guys that get, I guess, right, sum it up really easily. The guys that do this in the central banks are on salaries of 125 grand with economics degrees from Harvard, right? He's trying to teach you that. If you're not looking for a salary of 125 grand and you haven't got 4 years of economics under your belt from Harvard, this is going to be tricky. Yeah. So, but if you like the look of it, go and do it. I have no, Anton's brilliant, but I struggled with it, and I consider myself to be fairly intelligent. You know, you'll take a lot away from it, mostly confusion, and you'll find it doesn't help you if you're looking to trade any time frame lower than 4-hour charts. Really, it's not going to help you if you're trading down here on M15. That bias scorecard that I've just shown you here has got nothing to do with where this is going today. Intraday movement and intra-week movement has nothing to do with long-term fundamental bias. Yeah. If you look at the pound CAD, it's a buy at the moment. Yeah. So you would have only taken longs. You could have done that using an RSI. Yeah. 100% strike rate. But you also could have done it going short. Yeah. So the fact that this has a fundamental bias of long at the moment, the fact that and Antron's spreadsheet analysis would have done the same thing for you, yeah, doesn't mean you can't trade it short intraday. So if you're trading any lower time frames, irrelevant. It's kind of your long-term moving average. But if you want to do that, why not just go on a 4-hour chart and pick the 200 MA on the 4-hour or the 200 MA on the daily, which is this one here. That tells you to go long as well. Why spend all that time doing all the spreadsheet work? The banks and institutions are buying it. That spreadsheet is going to tell you that the banks and institutions are buying it, and it's going to tell you how to calculate how the banks and institutions think they're going to buy it. A moving average on the daily chart tells you what they're doing anyway. The only advantage is if you can work it out early, you're going to get in early, aren't you? But I don't know. That's just my opinion on it, having done it. And I found it hard going. So yeah. But yeah, very good. If you're into it, you know, it's like anything. If you're into fundamentals, that's the course for you. But at the end of the day, 90% of people making money as retail traders aren't trading daily charts. You know, they're intraday-ish, like me. So, do they actually use stops? Because I watched them in an interview and they were telling they put stop losses. Yeah, they have a stop in the fact that I have a stop. Yeah, so I have a stop as well. It's not a line in the sand. But I don't know. I mean, they don't really teach you a strategy. They teach you fundamentals. They'll give you some strategies to try. But, you know, at the end of the day, fundamentals are what drives this market. They teach you how the fundamentals work, how economics works, and how you can analyze the economics to give you a scorecarding system to give you a directional bias. When you press the button on that trade, whether the button be pressed here, 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 or here, because the fundamental bias for the last 4 weeks has been saying to buy it, and where you put your stop loss is whether or not you make money. They can give you 1,000 different strategies. I can give you 100 strategies to use with a moving average that will do the same thing. If above 200 moving average, buy. Yeah, I don't need to do all the spreadsheet work to tell me that the market's been going up. What the spreadsheet work does is it gives you an advantage in telling you when it's likely to turn around. Yeah, so use a smaller moving average, and you just won't get quite as it's real, like, you know, like I said, you don't have the time to do it. You also, you know, like anybody that sells courses, you know, not taking away from Anton's work at all, but they also sell a service. Well, they'll do the spreadsheet work for you for $1,000 a month or something, you know. So there's here's how you do it, guys. What do you mean you can't be asked? Do you want us to do it for you? Pay up. Yeah, there's always additional money making things in there. Yeah, so you can pay them to do the analysis for you, and at the end of the day, they will give you a number, and that number will indicate whether you should be doing that or that. What you do with that 11, yeah, that's what they're not going to give you. Right? If you've got a buy there are ways to buy it. You could buy dips, you could buy bounces, you could buy extensions in RSI. It's the same stuff as everybody else will teach you. Yeah. All they're teaching you is how to get a directional bias. They're not going to teach you this is the way that you get in. There are millions of ways to get in. Yeah. We know that support and resistance works. We know that RSI extensions work. Everything works sometimes. So using a 200 moving average and an RSI extension to the downside is going to work sometimes. Where you put your stop is up to you. How you move your stop is up to you. But again, it's all discretionary. This is the thing you find in big prop firms. In the proper prop firms, not the crap that we see online. Yeah, proper proprietary trading companies like SMB Capital and people like that. Yeah. Axe Capital, if you watch Billions, same thing. Yeah. And in institutional banks, they all have different ways of getting into the market, and it's all discretionary based on information and risk profiles. That's it. It's discretionary. There isn't a, this is what you do when this does that. There will be a book of setups, or playbooks as they call them. But the playbooks have the same probability as you and I have every time they press that button. The moving average says long. The fundamentals say long. We press the button to go long. CPI comes out lower than expected. We get stopped out. The banks and institutions have no advantage over you, me, or anyone else when that unexpected news result hits the market. They will be stopped out or do a stop and reverse or whatever they want to do with their strategy based on the same as we will, because the banks and institutions also cannot see the future. You can predict it as much as you can, and using this type of system, but that doesn't give you any bigger edge in the market than anybody else. It's 50-50 every time you hit the button. Yeah. You've got to also ask yourself the question, why is somebody working in Goldman Sachs, running a successful company, selling a course for $5,000? Doesn't care if you pass, fail, they don't care. They care that every time someone presses that buy button to learn fundamentals from them, they make $5,000 out of it. Anyway, that's just my opinion on courses in general, and you know that already. I got a new course coming up, by the way. It's going to be £2,500. I haven't really. Okay, Aussie CAD short. Lovely resistance level we're at right now. Beautiful rejection on this one on Friday. So we pushed up Thursday, stopped there. We tried to get through it on Friday, and failed. Obviously, the Canadian dollar weak at the moment, which is why we're retesting that level. So good looking short opportunity. Again, no extensions on RSI. Fundamental bias on it is long. Yeah, doesn't mean you couldn't have made a load of money all the way down there, as I did. Yeah, the fundamental bias is however long. Doesn't help you over the last 2 weeks, does it? It's been coming down for 2 weeks. Again, this is the other problem with it. It's long term, long term. So if you were to just hit the button, that's the wrong way. If you were to just hit the button there, you've got more chance of it working. It didn't work there, did it? Didn't work there, did it? The bias, I can tell you for sure, on his spreadsheet is long at the moment on this. Yeah, those two trades didn't work in the last 2 weeks. Doesn't really help, does it? So yeah, good looking opportunity for a short here potentially, but we've got so much news coming on the CAD this week, and it's forecast to weaken the CAD a little bit more. So really the bias on it is here. So RSI extensions to the downside will probably play out faster than long, but again, same thing here. The Canadian dollar, we've got forecasts for probably worse than expected news. If that news comes out way better than expected, the Canadian dollar is going to strengthen dramatically. Yeah, it's news. The change in the news is the important thing. And what you would do with Anton now is when you get that news event on the CAD come out, you will tap that number into that spreadsheet, and it will add a portion of that data's weight into the big overall scorecard, adjusting that number. That number goes from a 10 to a 9.7. You've still got the same bias. Yeah, but intra-week, that thing will do something like that. Yeah, you've got much more chance of making money on short-term movement, in my opinion, than you have trying to guess the long-term trend. You just need to bear it in mind. Yeah, I shorted it here. I've been saying for the last couple of months, the bias is long on this. It doesn't stop me shorting it. Yeah, because if it goes up, it's going to come down on its way up. Still opportunities to make money, mean reverting something that's going that way long term. Aussie dollar Swiss, Swiss franc at the moment all over the place. We've had a really weak Swissy, but we've also had a lot of strength. The Swiss National Bank, Jordan's confirmed that they are going to intervene. So they will strengthen and weaken this as they see fit, which is why you're going to see lots of movement in the Swissy, which just comes out of nowhere and carries on for days. So it's very difficult to predict anything with the Swiss franc at the moment. Support resistance levels probably going to work out, a la that one there. So, there's no directional bias as such with the Swiss. So RSI extensions to the upside or downside, but these are the ones that you could be in for a little longer than normal. So I haven't got any Swiss exposure on at the moment, but then nothing on the Swiss has really got extended. So propulsion gap bounce potentially there, but you know, we haven't gone anywhere. We're stuck at the moment, kind of contracting at the minute. So could go either way, that one. Nothing really exciting to look at than that. Aussie New Zealand, we're up at resistance. So nice weekly resistance, held again this morning. Reverse alert's just gone in, so it looks like a good short back down into propulsion, into yesterday's low, previous day's low. Let me just quickly look at the indices. So yeah, no, just dead today. Absolutely in the middle of the hedge. Just nothing to do with it today. It's dead as a door now. So yeah, Aussie New Zealand. So the bias on this one is potentially long, more long than short. But as you can see, for the last sort of 3 weeks, really, that's your 3-week high and low, your 2-week high and low. Sorry, yeah, high and low, and last week's high and low. So you know, right now looks like a good short. So it's not extended. We had an extension on Friday, but it only just got there again. So nothing is really strong enough to get me excited at the moment. There was a long opportunity there, which you would have taken 2 on if you didn't get out in the first move. But I just can't get anything to signal at the minute. So again, if you want to take the riskier trades, support resistance bounces rather than RSI extensions, that's short right now. So a good looking short play back down into here. You've got all these weekly, monthly lows. You've got a propulsion gap target, which is 3/4 of an ADR of movement to the downside. You've had an hourly reverse alert. You had a 15-minute reverse alert this morning and a retest. Yeah, so if we break that low of the day, you're looking at testing yesterday's low, previous day's low area down here, which is 3/4 of an ADR. So you could look for pullback shorts on that. Other than that, not a lot. Aussie US, so US dollar obviously is all this week is massively US dollar news heavy. So obviously with FOMC and the first interest rate drop coming, we've got potential weakness coming in this US. So again, longs. But as you can see, you know, been longing and shorting it. They've been difficult trades, but they've all worked out. So just a case of waiting and seeing where this one goes. FOMC will take it back up to test that area. If we get the weakness, if we get the strength, we'll be heading down and testing these sorts of areas down here. But right now, there was a short signal Friday, very weak. As I say, the last proper signal was up here. So it's not signaling strength in either direction, therefore there's no exits. Shorting ADRs, longing ADRs, RSI extensions, just normal stuff, but it's just not getting anywhere at the minute. Not giving any signals either. CAD Swiss, we're sideways for the last few weeks, stuck. So the Swiss franc move obviously was very similar to the yen move. It's pulled back, we've stuck for weeks, not going anywhere. So again, bias on it really is that. And obviously doesn't give you any advantage. So good for bounce plays. But obviously if that does weaken this week and we break that low, looks like, same as with the yen pairs, we're heading back to retest the lows from the month where we got the intervention move on the yen. So, but it's very, very slow, hard work to get there. And again, one entry back there, that's it. So, dead. So I've not got any exposure on at the moment. There's just nothing moving fast enough or hard enough to really get any opportunities on at the minute. And again, moving down to lower time frames is one option you can look at. But obviously when you move down to lower time frames and then the volatility picks up, you're stuck in a position way earlier than you normally would be. So just have to sit through these sometimes and wait. Euro odd, we got that weekly high. So that was the high of the previous week, of the Friday, which was the news. The Monday topped out at that weekly high. So that's just really one resistance, the upside. Last week's low kind of settled around this area here. So we're bang in the middle at the moment. Potential push up, but you can see 125 ADR and ADR down there. This thing's finding it hard to get any real strength. So with this one, basically the bias is difficult on the euro now because we've dropped the interest rates. It's more neutral. The Australian dollar is bullish, so therefore it's more likely to get pushed down than it is to be able to rally. So I'll be looking much more for short opportunities on it. ADR hits to the upside, propulsion gap bounces, daily high tests, that sort of stuff. So intraday, that's what you kind of want to be looking at. But let's say 4 hour and hourly, not really giving any signals at the minute. Euro CAD, got one short on this from Friday. So took first entry on that one on Friday, looking for a propulsion move or a propulsion gap test. We've broken out this morning, so it seems like they are just continuing to sell off the US and the CAD ahead of the news this week. So next entry will be there, heading up for that weekly high, and obviously we've got that high there. So this whole area here is potentially good resistance. 125 ADR roughly today would be next resistance to the upside. No pullback whatsoever, profit take on that leg. So this is now all one leg. So if we can get up to there, get a second entry on, average will jump up, and we're looking to get out on a retest of that high or that high there. This propulsion gap basically. So shorts on that one at the moment. And again, kind of short to neutral, short. Yeah, there's no advantage. So really you should be able to trade it in any direction and just get out basically as the market moves up and down. Hopefully we won't get any more ridiculous 300 ADR moves in 2 hours like we had at the beginning of August. Quite sure what happened there, but they broke the market. Euro Swiss sideways. So the Euro and the Swiss, obviously close trade partners. They tend to move together on news. So ADR on this one fairly small, it's 58. We're not going anywhere. There's no real advantage long or short. Again, you know, these sorts of pairs, the danger with these sorts of pairs is when they're ranging so tightly like this. You go, oh, well, I'm just going to take a short at the high and a long at the low because that's what it's been doing for 2 weeks. But that's what it's been doing for 2 weeks. It's probably ready now to break out. So you take that entry and it happens to usually be the one where it breaks, which is why range trading is so difficult. Everything is so difficult. Range trading is difficult because by the time you've established the range, it's ready to break out. So by the time you spot the opportunity, you've missed the opportunity. Breakout trades, obviously, and trend trades are hard because the market spends 80% of its time doing that. But it doesn't tell you that until it's done it a few times. By that time, you've missed it. So it's ready to break out, this one. We've obviously got a little bit of news coming up this week, which may well help it along the way. So again, doesn't matter which way you trade this one, I don't think at the moment, unless we get a safe haven run, which obviously you're safer being short. So the safer trade on Euro Swiss is to go short only. So wait for extensions above RSI, wait for ADR hits to the upside, find some decent propulsion gaps or resistance to the upside to short it from. So if we do get a safe haven run on anything escalating in the Middle East, you're on the right side of it. But yeah, it shouldn't really do an awful lot. Euro pound, very similar, shouldn't do an awful lot. And as you can see, I got stuck in this for 12 days because it's doing exactly that, not a lot. So Euro is now dropped its interest rates. We've got one more rate drop coming this year, probably. So bias on it is ever so slightly neutral. The pound, we should be dropping interest rates, especially if that CPI number this week comes out lower than 2.2, we'll be going down. So chances are that's probably going to go up. So at the moment, as you can see, it's not doing anything. You're just not going to get any signals on it unless you're dropping down to silly low time frames. So at the minute, I'd be much more interested in taking longs because I'm expecting the pound to become weaker. At the moment, it isn't, but I'm expecting it to become weaker when Bailey announces the next interest rate drop, which will probably be October. If we get anything lower than 2.2 on CPI on Thursday, Wednesday, that will obviously mean that there's much more urgency to drop the interest rate from 5 down to 4.75, which will weaken the pound. So I'd be more inclined to do that based on that happening. However, as you can see, the market has nothing to do with this at the moment. So stuck. Again, not a lot you can do. 5-minute time frames, scalping highs and lows. It's very much the same with the Euro New Zealand. New Zealand dropped its interest rates unexpectedly. Hasn't done much since. Very, very quiet. So again, we're in a range, coming out of a range. Again, it's news, range, news, range. We seem to be back in that cycle again. So you could, in theory, trade this one in either direction. We're probably going to continue to drop interest rates of New Zealand dollar, which would make it ever so slightly more bullish, but you should be able to trade it in either direction. So just waiting for setups on it. Again, if you're trading 70-30, you're getting loads of setups. Anybody using the Market Reverse Alerts EA or the Position Trader EA at the moment using 70-30 levels, probably killing it. The last month has probably been one of the best months ever. However, it's not going to stay like that. So I'm waiting for those bigger extensions to get in. We're just not getting them. So again, here, very, very tight contraction for the last week. The previous week, we had a little bit of move up and then a tight contraction. So that's really what I can see. 150 ADR on it, maybe down here at the moment. There's no reason for this to go parabolic in either direction at all. So again, resistance highs and lows, RSI extensions, ADR hits. ADR, someone got in touch with me on Telegram last week who's running the ADR set file on the Market Reverse Alerts EA and said, why am I not running this anymore? It's absolutely killing it. Yeah, it will kill it in conditions like this, because if it does push to ADR, it's exhausted. It has just got no strength. Nothing's got any strength, is it? So, but obviously at some point it will push to ADR and then it will flag and it will squeeze, in which case that's where you want to be using your RSIs. But ADR with a stop loss at the moment is probably the best strategy you could probably do. And that's what I've been doing on my my Dublin account. That was a really bad accent. Brilliant. It's almost 100% strike rate. It's fantastic. So, but won't last that long. So we're waiting to see what happens with this one. Not going anywhere at the minute. Euro, US dollar, again, stance on the US. Unless the Fed changes its mind, which it does every time the wind changes direction. At the moment, that is your bias. Euro has dropped its rates. We are not dropping rates, maybe another quarter by the end of the year. The US is starting its interest rate cycle drop, and it's forecast to do anything up to 1% by the end of the year. So you've got to say the US is going to be weak. However, doesn't mean that the euro is going to be strong. So this will probably be one of the best pairs to trade, because it always is anyway. It's the most liquid currency we have. Most liquid cross that we have. Market structure is very, very good. It's always moving up and down because you've always got movement on the US dollar. You've always got movement on the euro. So as far as I'm concerned, any extensions in any direction, I'll be jumping straight in on this. Again, just not getting the signals. 4 hour, yeah. It's the, you can see by, you're going back, we're scrolling back here to February. This is pretty much this year. It doesn't matter whether you go long or short on it. The market structure is beautiful all the time. Yeah. So you're always going to be in and able to get exits on this. Yeah. It's always moving. It's the safest thing on the planet to trade, unless we get a massive interest rate differential for some reason and it goes really out of whack. But you'll always find it hovering around parity most of the time. So parity's here. Yeah, so it's always, somewhere around the 1-to-1 ratio, apart from obviously the interest rate rally. Yeah, the euro was closed during COVID. They lost a load of money. The US stock market rallied. Yeah, this was just an abnormal. Yeah, this was a COVID screw up, basically. But assuming we don't get monkeypox taking over as the next COVID, we should continue just to do what we normally do. And even when we do that, there is market structure in the movement. Yeah, so it's orderly, always very orderly. Market makes a lot of money out of this cross because it's the most liquid, two biggest currencies on the planet. It's always going to work. So just need to wait for a signal, basically. But at the moment, obviously, you got 150 ADR today. You got that high from the news, and 225 ADR is your low from last week. You got a high there at 125 as well, which is potentially pretty good area to the downside. That propulsion move, where we got the reversal alert, so it'd be a retest of the reversal alert, basically. Pound, so Bailey, no clue as to when we're dropping interest rates. We're not dropping interest rates this week. The only thing that would change that fact, I think, is whether that CPI number comes out ridiculously different. If we got 2%, for example, which is target for inflation, if that came out as 2% on the year, there's an argument for dropping that interest rate because we were expecting it to remain stable above 2%. If it doesn't do that and it drops, they'll need to do something with that. Otherwise, we're going to overshoot. So the biggest clue we're going to get this week is going to come in the votes, basically, for what we're going to do with it. So these numbers basically are increase rates, freeze rates, and drop rates. Yeah. So I think that's the right order, isn't it? Yeah. Increase, decrease, freeze. So obviously we are expecting them to freeze. So if the first number, that won't change. That will still be 0. They're not going to increase rates. That's a given. Yeah. So, but if this one in the middle here increases, we're probably going to get a drop in October on the interest rates. So the market will probably see that as a start of a bearish move. Yeah. So this is what we need to pay attention to this week on Thursday. So, and again, Anton will teach you all of this. Yeah, so there is an opportunity there to start a short position on the pound, but it's it's not really doing a lot. DAX just tried to break out of the opening 15 minutes, but it's not necessarily failing because we are making new higher lows, but it's not making any progress. FTSE's managed to get to 2R. So if you took the 5-minute ORB on the FTSE, I mean, you haven't really got very far. You got 2R, but that's about it today by the looks of things. US markets rallying at the open. Well, not at the open, at the European Open, but still not broken out of Globex highs. So nothing much happening this morning, is there? Unfortunately. So yeah, pound moving forward, we should be looking for dropping interest rates, which should start to weaken that pound a little bit. Australian dollar, obviously, at the moment is a long. So bias on this one. There's your short entry up there. But yeah, I'd much rather be short on this than I would be long. However, it's not going to be a very fast drop. Yeah, none of these pairs, none of these currencies are going to be fast drops. The euro is the biggest, fastest drop we've seen, and they're not going to move it. But they've had months and months and months of gradual decreases, haven't they? So everything should be very orderly, I think, moving forward. But obviously, we need some strength. So weakness moving forward in this one. So that's the anomaly that we got at the beginning of August. That's really your high. That monthly high is your previous high. And obviously, as you can see, we've made a lower high. So we should be now looking to put in a lower low over the next few weeks, months. So coming back down eventually to retest these lows down here. So shorts would be better than longs. However, it's going to just move on news. Pound CAD. So got my first short on this one. Again, this is weakening a lot faster than anticipated, and we've broken out now. So hoping for some negative news on the pound this week, but there's no reason why this should be particularly strong, and obviously it's very, very extended. So we got the advantage here on this one, particularly of having this massive move, which they're going to need to scale out at some point. So the move down will be a lot quicker when it happens. But at the moment, fundamentals are probably not going to go my way this week. So just be holding this for a little bit. There's no resistance upside. So going back to the daily, we looked at this one earlier. You've got that high peak there, which is that's COVID, isn't it? Is that COVID? Yeah, that's March. So that's COVID peak. But this is your old high where we are now, excluding the COVID anomaly. So there's nothing to say that we won't come up and test that area, really. If we see sustained weakness in the Canadian and sustained weakness in the US, they will probably be weaker than the pound as the pound is weakening, which means grinding upwards. But obviously on the way, it's going to push and pull and push and pull and push and pull. So there's your profit take moves. We're on our next leg potentially up. So if this resistance doesn't hold and we're not back down here this week, we'll be coming back down at some point soon. So may have to hold it for a little bit longer. But we'll see if they hold that. This could well be a false breakout, especially as it's like pretty much all-time highs, isn't it? Apart from that COVID bounce or all-time highs in the last sort of 6 years or so. So it's going to take a lot to get through there, which means it's probably going to run out of steam fairly quick. But we'll see. Pound Swiss, again, this one can go either way, really. We're stuck for 3-4 weeks now. 5 weeks, don't know. Depends how long you want to go back, but we're just stuck. We're not going anywhere on this one at all. Just not interested in this at all at the minute. There's just nothing you can look at and say this is a good opportunity. It's just a mess. So sideways mess. Pound New Zealand, pretty much the same. Pound weakness. New Zealand is also weak. Much more of that. So any extensions to the upside, as you see, I took that one there. Took one there. I will take any extensions to the upside or downside on this. There's no real reason this should go parabolic in either direction either. There's no reason anything should really go parabolic at the moment. So, yeah, all good for extensions up or down. We've just tested last week's high today. 15-minute reversal alert has gone in this morning at last week's high. So nice 3-bar reversal at last week's high there. Reversal alert. Didn't quite retest it. But again, not going anywhere, but looks like a good potential short opportunity. Up at the highs. I'll be trading it back down into there or ADR. Pound US dollar, same as the euro US dollar. It really depends how much that weakness comes in the US dollar, basically. So I could easily see it being up here this week. Testing those highs. Whether it gets there before FOMC, we'll have to wait and see. But you've got very good resistance here. So there's a monthly level and the 2-week high. We've just broken out last week's high. So yeah, definitely be interested in shorts up here or up here. So we are already extended on the 15-minute this morning. So nice big strong push going. So hourly and 4-hourly. Yeah, if we get up to here, we'll get a 4-hour signal short. Well, I'll get a 4-hour signal short because I'm taking 80-20s at the minute. So I'll get one up there. That'd be nice. But right now, it's obviously on its way up. So if you want to play this up to that level, obviously, you can drop down to lower time frames, wait for it to pull back down, and then take reversal alerts long out of propulsion gaps, bottoms, resistance levels. But big, strong move today, or rather weakness in that US dollar, which would indicate typically that we should be getting rallies in those indices this week as well. But we'll see at the open this afternoon. New Zealand dollar CAD rallying up again. There's CAD weakness today, really CAD weak, isn't it? So see what happens when we test the high of last week. Intraday scalp opportunity there potentially. But again, bias on this one is a short against a short. So if you get any big extensions, there's your profit takes. Yeah, so this should, again, work very nicely. So once you're extended, get in on the bounces. Yeah. So the stronger, obviously, the move, the more likely the bounce is going to come and the quicker it's going to come. But again, market structure, beautiful on this at the moment. Just trading in any direction, really. There's no bias advantage, so bull or bear, don't care. Just trade it on any signal. So ADR hits to the upside, good shorts, downside, good longs, RSIs, either or. Just obviously, if you need more than one position, need more one position. But just looking at the trades on this, had a short there, which was 2, had a short there, which was a single, had a long there, which was a single. You know, there's not been many moves on this where we've needed multiple positions. There's one here where we had 4. But yeah, it's very nice and orderly at the moment, this one. Commodity pair against a commodity pair. So they tend to be more orderly. Again, safer pairs to trade. But obviously take longer to play out usually. New Zealand dollar Swiss. So the same with all the other Swiss pairs. The intervention move, pullback. Where we go from here, very, very, very hard to tell. So Swiss franc obviously dropped interest rates without telling anybody. Then they dropped them again without telling anybody. They forecast to drop them. So in theory, the Swiss franc will be weak, but that completely changed when the yen collapsed, or rather the yen rallied and everything collapsed against the yen. Everybody put their money into the Swiss franc, which massively powered up. So where we go from here is, I think we're probably reset back to normal. So it's a case of what's your directional bias on it? At the moment, it's that. So there is nothing, is there? There's just very hard to tell which way this is going to go. So again, should be able to trade Swiss pairs in any direction, unless Jordan decides to manipulate it, unless there's a safe haven run because of what's going on in conflict and all that sort of stuff. So again, tricky to forecast, even trickier to trade, because it will just move when it fancies it. So I'd still be looking for entries on big moves. So I want to see it really nicely extended before we get into something. Got divergence short there. You know, just wait for something to set up, really. It's just not happening this month, is it? Tired looking at the same old charts and no signals appearing on any dashboards. But anyway, so short opportunity there, beautiful on the New Zealand dollar, US dollar. Took 4 or 5 entries on that one. And yeah, so in theory, continuation long if we get loads of US dollar weakness coming in. However, New Zealand dollar is dropping interest rates as well. So this one is one of those that could, again, go in either direction. Propulsion gap bounce it's end of last month, isn't it? End of last month. Nice reversal short. So we're pulling back on that leg. May well have done that pullback and ready for the next leg up to come and test these highs up here. So dependent on what happens with that US interest rate this week, whether they drop it by a quarter or by a half, and what the rest of the news says this week for the US, unemployment claims, etc., we'll just see how weak that US dollar is. There is a chance that they factored in the US move already, and it won't do anything. Yeah, so you've always got that sort of factored in move where the market has already done the move before the news comes out. And again, talking about Anton Creel's course, that is what they are doing. Yeah, so they are predicting what they think is going to happen with fundamentals and moving before the fundamentals. That's why they are always ahead. That's why the banks are always ahead of us. Doesn't mean that we can't use the moves they've just put in to tell us where they're going next. Yeah, which is why we use propulsion gaps. So, but yeah, and in theory, we should be seeing weakness coming through in that US. Thanks for the subscribe, Stephen. Welcome aboard. Haven't had any subscribers for a while because we have the same old faces in here every day. Not that I don't love you all, but yeah, don't do any marketing, that's why. Sideways, US dollar CAD. So again, these two move together. So most of the time you will get nice market structure movement. Yeah, but at the minute it's a little bit squeezy because we keep changing our direction on the US. So every time we think the US is going to do something, the Fed come out and say the opposite, and the market is just squeezy at the moment with this, but it's working nicely. It's just longer holds, unfortunately. Hopefully we will get back to the more normal movement on the US dollar CAD, which is this. So we'll see what happens this week. Once we know that the US rate drop has happened and how aggressive it's been, I suspect we will probably continue a slight downward momentum, but not, shouldn't be parabolic. The only reason you're going to get a movement like this is if you get a confluence of news events happening. Some negative US news, followed by negative US news, followed by positive CAD news, followed by negative US news. If you get loads of news in the same direction that happens to fall one after the other, it's going to continuously do that. Yeah. Again, why it doesn't really help you having a fundamental bias necessarily, because if the news is all in one direction for both of them, it doesn't matter what your long-term bias is. Short-term intra-week movement is just going to do what it's going to do. So you're much better off, in my opinion, being sort of where we are time frame wise, rather than trying to be an expert or an idiot. Somewhere in the middle where you've smoothed out most of the movement is the best place to be. Hourly and 4 hourly. So yeah, either way on this. Obviously, because they both affect each other, if we get negative US movement and we get negative CAD movement, they're going to cancel each other out. Yeah, if we get negative US, i.e. they drop by 0.5%, and the Canadian unemployment actually goes up, or comes down rather, you're going to get a much stronger move. So I'm not really worried about which direction I trade this one in at the moment. I might change my mind on that after FOMC, but as you can see, we're getting some big, strong moves on this one. I've had lots of trades on this, but they've been a little bit squeezy. So I will continue to get in long or short on it. At the moment, we are looking like we want to pull back up into here. However, Wednesday, if it's not there by Wednesday, the decision is going to be made for us, isn't it? So, yeah, right now this week, not a lot you can really do with it, is there? Look at last week, market's waiting. And I suspect that's really the extreme we will get to this week. We'll probably stay inside bar until Wednesday on last week's move. US dollar Swiss, very much the same. Had a short on that last week. I actually traded a Swiss pair and got out. So yeah, again, if we come down and test last week's low, which is basically where we opened, you've also got that little spike down there. That's also ADR. We've got previous month's low, previous week's low. So this whole area this week, towards the front end of this week, would be a nice looking long opportunity. If it doesn't go though, and they drop the rate by 0.5%, you're off. So just be a bit careful with this one. Obviously, we know the Swiss franc is powering up with the yen. The yen is powering up again this morning. So yeah, tricky. US dollar Swiss is probably the most tricky pair, and the US dollar yen to trade at the moment, because you've got a currency which is forecast to be starting to weaken against the Swiss franc and the yen, who will safe haven run that way, and at the moment are just strong that way generally. So the whole bias on this is short, which means it's going to be very hard for you to get a signal to go short, because it's sustained movement to that downside. So any double tops, propulsion gap hits to the upside on any time frames, really, you've got much more chance, I think, of getting a short play working than you have a long one. But just don't get greedy with it, really. Just want to be in and out as fast as possible on anything Swiss, really, and yen related at the moment, if you can. Like I say, at the moment, I'm stuck on Aussie yen, but I don't mind, because I'm getting paid to hold it every night. 3-bar reversal potential going in on the Aussie yen. DAX stuck. So it's just not going anywhere today. This is the 1.5 hour line, which means usually by the end of that 1.5 hour, you've either found the high of the session or the low of the session. So in the next 5 minutes, that will become the high or that will become the low of the day. 92% of the time. Hugely accurate, that 1.5 hour reading. However, today, there's literally 6 pips in it. 60 points is just nothing. Ridiculous. Anyway. Hi, Peppy. Welcome aboard. No, not welcome aboard. Hello. You haven't subscribed? I was thinking to try a prop firm. They allow 10% drawdown on a 50k account. So I want to position trade H1M5. No. Well, you can try it. You won't have enough leverage to do position trading. It's 1 to 30. I mean, you might have. I mean, some prop firms will give you much more leverage, but try it. I don't know. Up to you. You're better off taking whatever you're going to put in that prop firm and trying to double it. So yeah, you could do, but it's kind of, you want on prop, you really need to use on prop. You need to use lower time frames. You want to be in and out intraday as much as possible. So you're better off, in my opinion, on prop using ADR reversals or using RSI extensions on lower time frames like M15. So look for M15 RSI extensions that get below 80 and above 20, below 20 and above 80. Yeah, scan for those and then take intraday scalps on them with a tight stop because they're likely to play out most of the time. And there isn't any on this one. It's Aussie yen, that's why. But you know, those sorts of shorts. Yeah. Obviously, you're not going to get that many signals, but get in with 2% risk or 1% risk scalping. I've position traded a prop account. I have passed a prop account position trading. It was incredibly hard and long. It took me weeks, many weeks to pass it. And it was lucky that there wasn't any squeezes, but the first squeeze you get, you'll be out. Also, double check with what the prop firm that you're using. Prop firms don't like martingale, which is understandable. So if you take a 0.01 there and then take a 0.01 there, that's fine. It's not martingale. If you take a 0.3 there and a 0.4 there, that's not martingale by the proper definition. Some of them will consider that martingale and they won't let you do it. They won't tell you until you've gone through and passed, and then they turn around and go, no, sorry, you can't do that. So check that. Also, there's this new rule that a lot of prop firms have come up. You can't take 2 trades in the same direction on the same currency. Yeah. Single direction trading, they don't allow it anymore. So what they want you to do is go 1 trade, stop loss, that's it. Yeah. They know that doesn't work long term, so that's why they want you to do that. If you go short and then it moves into profit and you add another position to it, no, that's one directional trading. Even though you were in profit when you added the second one, you're doubling up your risk. That's far too risky. We're not letting you do that. I don't know many traders that don't do that, that make money, because that's how you make money. If you get a trade working, put more size on the thing. It's working. No, you can't do that. Check the rules. This is why I'm trying to double this account, so I can do a video to show people how you can basically take an account and double it rather than having to put it into a prop firm. Use your own capital to trade with, if you can. Danny, super chatted 5 Australian dollars. Thank you very much. Much appreciated. 5 Australian dollars. What can I buy with 5 Australian dollars? Half as much as I can with £5. Cup of coffee. That's good. Thank you very much. Much appreciated. Thanks for answering my question in Discord. That's okay. That's what I'm here for. You don't have to pay me every time you answer a question. It would be great because I'd get an awful lot of money because I answer an awful lot of questions every day, but you don't have to. Very much appreciated. Thank you very much. Just that they offer 1 to 200 and I'm used to 1 to 500. Yeah, so less leverage means margin calls quicker. That's all. Up to you. It's just a Greg's pie. I could buy a Greg's pie with it, Danny. Yeah. I don't go to Greg's. Haven't got Greg's locally, actually. I did used to go to Greg's where I used to live. I had an office and we had a Greg's round the corner, and it's so dangerous because the smell of Greg's every time you walk out the office door is like, it's like zombie. Some way they attract you in, isn't it? But yeah, prop's luck. Prop is all about luck. Yeah, I've been through it many times. You're probably sick to death of me saying it, but if you look at the days of the week, yeah, whether or not you pass an evaluation on prop is dependent on the day of the week that you start. Yeah, so if you start on a Monday and your strategy has a losing run of 3 trades in a row, you're going to lose, you're going to lose, you're going to lose. Yeah, so the prop account you start on Monday is in drawdown. If you start the prop account on Wednesday, you're going to draw down slightly, but then Thursday and Friday are winning days. So by the end of the week, having started on a Wednesday, you're in profit. Starting on a Monday, you break even. It's got nothing to do with skill. It's got nothing to do with strategy. It's your market movement will be determining what you make and what you don't make, not you. Yeah, which is why prop firms have these 5% and 10% drawdown limits, because they know you will have a losing streak at some point. And it will take you beyond 5 and 10%. There is nobody I've ever met that is successful in trading that has not had a minimum of 10% drawdown in their account. Way more. I sit in 5% of drawdown virtually every day. I mean, 4% now. It's normal. Drawdown is risk. This is your risk in the market. If you don't have this, you can't make money. I don't know when it's going to go up and down. Banks don't know when it's going to go up and down. The prop firms don't know when it's going to go up and down. So how could I possibly time the market accurately enough to stay within a 5% drawdown on account? You can't. They know that. That's why they set the limit. It's not possible. Yes, short term, you can. You can also walk into a casino and put your money on red and black. Outcome is still the same. It's 50-50. How you do it is up to you. You can position trade in prop. You can scalp in prop. You can use ADR reversals, RSI extensions, the position trader EA, the market reverse alerts EA, the stock index hedge EA, the opening range breakout EA. They will all pass a prop evaluation for you if the conditions for the settings that you put on that EA are right for the market in the week that you start it. But the EA doesn't know. The EA has an edge, but the edge will only play out when the market allows it. And the market controls the edge, not you. So pick any strategy, doesn't matter. I've passed with SIH, I've passed with ORB, I've passed position trading, I've passed scalping, I've passed flipping a coin. I did it in here live on my Forex fund account. I flipped a coin, I went long, the market went long, I made 8%. I flipped a coin, I went short, the market went short, I made 8%. I was funded with 100 grand by the end of the day. I had nothing to do with it but a coin flip. So, and then I made some money out of the account and blew it because you can't sustain it. It doesn't matter what you do, you can't sustain that. You will always go over those levels unless you use silly risk. Tiny risk, in which case you will survive, but you will take a long time to get paid, which is why it's better to trade with your own capital. With small leverage, you can't position trade many pairs. No, so you'd have to limit yourself, definitely. So the best thing to do if you're position trading on prop is, personally, what I would be looking for are those A star, A+++ setups, yeah? So 15-minute RSI, I want it above the 80 and below the 20. Yeah, so there are no signals here. Yeah, no signals there on the pound odd. No signals. We had one signal there on the pound odd. I'd have to scroll out a bit. Yeah, so short that, done. Had one there, long that, done. That's it. So pound odd, since the 19th of August, for the last month, you've had 2 signals. It's 100% strike rate, but you've had 2 signals. Yeah, don't forget you've got 28 FX pairs. So this is just the pound odd. We've had 2 trades in the last month. Yeah, but do not get into these with 0.25%. Get into these with 2 to 3% risk, and give it movement. Give it half an ADR to play out, and set your TP at 1-to-1 risk reward ratio. Yeah, so half an ADR stop, half an ADR TP. That's making you 2 to 3%. That made 4% in a month on this one currency. Just using that. Position Trader EA will do this for you. Market Reverse Alerts EA will do this for you. But you take the A+++++ setups only. Yeah. ADR extensions. So forget 100, forget 125, get in at 150, because you've got a 90% chance pretty much it's not going to go any further. So when you get a reversal alert at 150, or a hammer, a shooting star, a moving average, whatever it be, the reason for the signal, the condition is there, not there or there, because the strike rate on that is higher. Yeah, it's all about, you've got to get it right as much as possible in prop, because they know if most traders will want to be trading. If you get a prop account, what do you want to do? Right, I've got to take a trade. You're not going to take AAA plus setups in prop, because you want to be trading. You can't hit the target if you're not trading. You've got to wait for the setups. They've got to be super, super, super reliable. But if you're going to do that, just double your own account. Don't give $500 to a prop account. Put $500 in an account, use 5% risk, and try and make 5% every time you get one of those opportunities. On this account, I made 10% on those 2 trades. There's only been 2. Made 10% on those. If I use 5% risk, it's 50. So I had a $500 account. In a month, I've increased it to 550. This is just one pair, obviously. There's loads of pairs. It's much better to do it that way than it is to just give a prop account money all the time. That's all you're doing. Greg's pie. Greg Secker? No, I'm not giving Gib any money. If you want the difference between good educators and bad educators, we've mentioned them both today. Anton Creel, Greg Secker. You take your pick as which one you think is the good one. But if I do it as a 10K account, then I could be 49% in drawdown. In 6 months, I will have 6K more in my live account. Yep. But you won't be able to go 49% in drawdown because you'll get margin called. What they give you, right? So if you're trading a 100K account with a 10% drawdown, you're actually trading a 10K account. So your risk needs to be as per a 10K account. But you can't use that 10K because you've got a margin. The margin is based on 100K, not on 10K. You won't get into 49% drawdown on that. It's just you get margin call. I don't know. Try it. Try it. Best thing to do is to try and find one that gives you a free demo. And try whatever you're going to try on a free demo. Or better still, try it on the smallest account size they can give you. Yeah, and just adjust your risk accordingly. Risk should always be percentage based, and it should always be based on ADR. So it doesn't matter what the account size is. That's the whole reason I teach in the bootcamp and why I do what I do the way I do it. Because ADR is dynamic, it changes, and it's unique to every instrument. Risk as a percentage is the same regardless of the account size. If you're trading a 100K account, a million account, or $1,000 account, 1% is 1%. If you risk 1% to make 1%, that's what you're doing. If you're doing it on a 100,000 account, you're making a lot more than if you do it on a 1,000 account. But the risk is the same. The ADR is the same. Those two are the constants we have in trading, ADR and risk. So if you want holy grail in trading, it's ADR and risk. It's the only thing you need to worry about. The average daily range is dynamic and unique. Risk is unique. 10 pips on pound odd and 10 pips on euro pound and 10 pips on Bitcoin, totally different movements. 10 pips on oil is half an ADR. 10 pips on the pound US dollar at the moment is That's a really bad example. 10 pips on Euro New Zealand at the moment is about 10% of its daily movement. Yeah, 10 pips on Aussie dollar Swiss is around about 20% of its daily movement. Yeah, but 10% of its daily movement is 10% of its daily movement. Forget pips again. But try it. You know, I get prop, and I get the reason prop is so popular. Everybody needs money to trade with. They've tapped into the bit that nobody thinks about when they start trading. Nobody thinks, how much money do I need to do this as a career, as a job, as a second income? Nobody ever thinks when they start out, how much startup capital do I need to get my business going? Prop fill that gap, because people trade for 6 months, a year, 2 years, and suddenly go, I'm half making it, but God, to make it with the strike rate that I've got, I'm going to need 100 grand. Prop come along and go, would you like 100 grand? You go, yes. But you don't realize your strategy will not fit into their rule set. That's why it doesn't work. Because their rule set is not how your strategy works. No strategy is ever going to sit there and not make a 10% loss. It will. Everything. Pension funds, hedge, everybody does. Pension funds and hedge funds then spend most of their time in drawdown, up to 40% of the fund. Normal to be in 40% drawdown on a pension fund. It's normal. They can't trade prop, can they? Not they who want to, but it just doesn't work that way. Successful trading is not about rules that stop you becoming profitable. They're about rules that don't. That's the difference. But give it a go. If you're using small risk, I think it's high risk. Scalping, high risk. Yeah. ORB, SIH. Yeah. 5% risk. Bang. 10% made. Done. That's it. Look, this opening range breakout today is a great example. Look, on the FTSE, yeah? You've got 5% daily drawdown limit, right? So what you do is you risk 4% of the account using SIH on an instrument, yeah? So 4% risk over the range. If you get a 1R, you've made 4%. If you get a 2R, you've made 8%. What's the target on prop? Ching! I've passed. So this afternoon, I'll trade the US session, and I will repeat the process. If I get 2 clean breaks a day, I've passed. If tomorrow I get 2 clean breaks, I've made 8 grand. I stop, I wait for payday, and I withdraw that money. That's how you do prop, yeah? It's the only way I know how to make money out of it. That's what I used to do all the time with my Forex funds. But I've stopped doing it because when you actually look at the maths and the work involved, which is part of running a job, running a business, yeah, the labor intensity of this is incredible compared to running your own funds. I'm sitting here all morning talking to you. I haven't even looked at my P&L. It doesn't cross my mind because it doesn't matter. My risk is appropriate to what's going on in the market, and it's not going to move enough to make me any problems, is it? In here, you've got problems if it goes a couple of ticks against you, haven't you? But it's not sustainable at that level, because you're going to get days like today where you've locked in 4% loss. Yeah. So right now, this is in 4% loss. So I can't really recover from it at that level, because if the recovery trade doesn't work, it's going to blow the account, isn't it? Because it's going to go over 5% drawdown. So you could go with 1% risk, but then it's probably going to take you 3 to 4 weeks to get out in profit. Yeah. It's a game. It's a fun game. I love trading prop. But do you know what is much more fun? Trading with your own capital, sticking $1 grand of your own capital on an account and challenging yourself to double that with high risk. That's more fun, because that's real money. Much more fun. If you're going to do 2 prop evaluations at 100 grand, you're going to spend $1,000, aren't you? Take that $1,000, don't give it to the prop firm, stick it in an account and try and double it. Yeah. Then if you want to, withdraw 1,000 of it and go and do 2 prop evaluations, and then carry on playing with that 1,000 you've got. But you know, it's just the way it works. On a 1,000K account, use 0.1 lot sizes. You can, but you're never going to hit their target. Yeah, you've got to produce $8,000 of profit using 0.1 lot sizing. Yeah, look at my P&L on 100. It's actually more than that now, but it's 100 and whatever account, 100K account, 130K. I'm in 5.5 grand's worth of drawdown here, but my lot size is 6.67. If you're in 0.01 or 0.1 lot sizing, you've still got to make 8 grand. You're not going to do it, are you, with 0.1 lot sizes? It's going to take forever. Absolutely forever. What broker do I use for real account? DarwinX. Sorry, well, yeah, I use DarwinX and I use RoboForex. So 10% drawdown would mean 1%. Yeah. Up to you. Yeah, so the broker I use DarwinX for indices, and I use RoboForex for Forex. It's on the recommended brokers page. Another one is Global Prime, who I don't actually trade with them. I have an account with them and I've tested them. Spreads are good, leverage is good, established. Well, I mean, you can see what's important to me as a trader. Yeah, they're not some fly-by-night crappy broker. They've got decent spreads and decent leverage. That's what I'm interested in. I can't control anything with a brokerage, but whether they've got good spreads and leverage, everything else is completely out of my control. So that's what I'm interested in. And have you been around for a long time? Are you a big company? Are you disappearing? Yeah, IC Markets. Yeah, you could use IC Markets. I mean, they've got terrible leverage, but I can't use them because they've got no leverage. But it's down to your country, basically, as to where you can go. We've got ECB talking at the moment. Italian CPI forecast, really, isn't it? So there we go. I will do it in approximately 6 months. Yeah. So again, this is the thing you've got to think about with prop, right? And this is the thing that, again, doesn't work for me. If I've paid $500 to get 100 grand's worth of trading funds, and I plan to pass it in 6 months. In 6 months' time, I've got 8 grand. Now, if you can live off 12 grand a year, fine. I can't. I've got to use higher risk than that. Yeah, because if I'm going to make 8 grand in 6 months, I'm going to assume, and this is phase 1, yeah, in 6 months. Phase 2 is going to take you 6 months. So in a year's time, you've got 100 grand's worth of funding. Yeah, but you haven't. You've got 10. Smoke and mirrors. It's not real. And that's not even real. That funding is not real. They're using the money from the failed traders to pay the passes. Yeah, there's no real capital involved in any of these prop firms. They're not real. This is why my Forex funds got chased around the world by the FBI or whoever it was. But you know, you can double an account in a week. You can double an account in a day. Yeah. Look at the DAX right now. Yeah. If you put 20% risk or 25% risk over one ADR now on the DAX and flip a coin, heads long, tails short, you got a 50-50 chance of making 25% increase on your account today. It's 50-50, isn't it? Got shorts on the Euro odd. I'd really like to exit those this week. Euro odd. Euro odd. It's Euro CAD. You got. I mean, this should come down now. Really, you should be down there. I presume you got in here somewhere around there. Probably around break even-ish, I would imagine. But yeah, it's not going anywhere, is it? So I would suspect we should be down there basically. So there's no reason why we shouldn't be looking for shorts on anything against the Australian dollar at the moment, really. So it should be a decent short, but struggling to go anywhere at the moment. Like I say, it's the old. We're going back to the old news, nothing, news, nothing, news, nothing type scenario. Unfortunately, at the minute. Right, that's all I've got for you today, really. There's not a lot setting up anywhere. There's no ADRs. RSI, we're struggling, just really struggling to find signals at the moment. I'm struggling to find any reason to get any exposure on right now. So we will see. We've got longs on EJ2. Yeah. Yeah, I mean, that's probably one of the weaker yens, because obviously the euro's dropped its rates and the yen's powering up, so the short bias there. Whereas the Aussie, the reason I'm long Aussie yen is because the Aussie is not dropping interest rates. So even if the yen powers up, I've got more chance of the Aussie powering back against it than the others. Euro, pound, US, CAD, Aussie. But it doesn't mean this yen move is very, very strong. As we know, we've hit monthly range already. On that, all the yens have hit the monthly range already. So doesn't mean obviously we can't do 175% of our monthly range. If it wants to continue to go, it will continue to go, but it is extended. So there is a chance of a pullback on these yen pairs. And it could well be the US that triggers that this week. So Wednesday, we might find all the yens unravel and we get don't forget the climbing up the stairs, falling down the elevator shaft scenario. Yeah, we've been falling down the stairs. We're going to get the elevator shaft back up. We're going to get the elevator back up. Yeah, so it works both ways. Yeah, the profit take move is always way more powerful than the scale in to the move. So we should see, good ADR followed by an ADR. It's happened many, many times. Not so much on the yen recently because obviously, it's been massively strong, but you come down quick. So that took 1, 2, 3, 4, 5, 6, 6-7 days to hit the peak. 3 days later, we'd done 38% of it. 5 days later, we've done 50% of it. This is always quicker. And if you've been moving down, that is always faster. Yeah. Profit take moves are fear moves. Your P&L is growing and growing and growing. When you see your P&L dropping, you panic. Yeah. And when you panic, you get out. And that makes other people's P&Ls drop, which means they panic and they get out, which makes other people's P&Ls drop, which makes them panic and them get out because they've been sitting in profit for weeks or days on it. Then all the sellers see a reversal starting, so they get in, which adds to the selling pressure, which adds to the panic, which adds to the speed of removing the P&L, which means it comes down quicker than it goes up. Always the way, or it goes up quicker than it comes down. It's just human movement. It's just what we do. You sit there watching your P&L get bigger and bigger and bigger, and you see a bear candle, and you go, I'm out. That was lucky, wasn't it? And as soon as you see that bear candle and you get out, you create a bigger bear candle, which means other people that haven't seen the first bear candle see the second bear candle and they get out. Yeah, bang. All of a sudden, you've done 50% of the move. You haven't even, you've gone for walk the dog, you come back, 50% of the move's gone. It's that quick. Always goes that way. US dollar yen, look. Panic. weeks and weeks and weeks and weeks, a week. Weeks and weeks and weeks and weeks, a week. Yeah, panic. That was part of an intervention, obviously, but it's just, it's how it works. Over and over again, we talk about it, don't we? It is a phenomenon. Whatever your theory as to why the phenomenon happens, doesn't matter. If it happens, it happens. It's fact. But we will see this week. It will move at some point. The DAX, unfortunately, though, hasn't got the memo. So, yeah. My God. I'm still going to be in this tomorrow. So I'll try and get out of this afternoon, but this looks like a loss today. Can't do anything with it. If it's not going to move, I can't get to a target. If I can't get to a target, I can't get out. So not holding up much hope for that one today. And US markets, obviously, we've got no news today. So these things could just flip-flop around as well. So be careful today. It might be just one of those horrible rotational days. So I'll be back tomorrow at 2:15. We'll trade the US Open. See if we can get some money out of them. Just had an alert. Pound US dollars just hit ADR. There you go. Really weak US. So pound US dollar ADR hit. So lower highs potentially going in at ADR. So good looking short opportunity on that one. 5 minute. Wait for some kind of reversal. And you've got backup coming up there. Weekly 150. So again, 150 ADR. If you want to take a AAA, if it gets there, that is it. You've got confluence with weekly high. You've got extension 150% of normal daily movement. Exhaustion play back down into previous resistance. Mean reversion. But if you're on prop, that's your entry. If you're on your own account, do what you like. Right, I'll leave it there. Anything you need, let me know. I'll be in Telegram or Discord. I'll be back tomorrow afternoon, 2:15, and yeah, we'll see where we go from there. But no news today to worry about. 1:30 tomorrow, we'll look at what's happened with the CAD CPI before we start the US session and retail sales. All right, so have a good one. Anything you need, let me know. Otherwise, I will see you next time.